Today's show is brought to you by Nasdaq. Leveraging its reach, trusted execution platform, and experience, Nasdaq helps with ETF listing processes by delivering a complete ETF ecosystem with deep liquidity and unparalleled marketing tools to differentiate, activate, and amplify ETFs, issuers, brands. I'd say business is pretty good. Stock is near an all-time high. We're going to talk about the boom in ETF listings today. Nasdaq, a clear beneficiary.
Number one exchange for ETFs transfer since 2021.
Number one.
Yeah, I didn't realize the stock was at an all-time high.
I wouldn't even know who number two is. How about that? I think they call that dominant.
Okay, Nasdaq.com to learn more.
Welcome to Animal Spirits with Michael and Ben. When I spoke about my difficulty peeling a hard-boiled egg, I did not anticipate that being perhaps the number one email topic in the history of Animal Spirits.
We got a lot of egg experts that listen to the show. I got a lot of stuff on hard-boiled eggs, and guess what? My daughter Kate, 7 years old, I made her 2 hard-boiled eggs last night using the tent method, and she said these are the best hard-boiled eggs I've ever had.
Let me ask you a question, then I promise we'll leave the egg thing. How do you crack an egg? How does Ben Carlson crack an egg?
One hand.
No, but where do you crack the egg, I guess, specifically?
You mean on a bowl or on a pan, or what?
Where do you crack it?
Yeah, in the middle of the egg on the bowl.
The middle of the egg on the bowl. So the corner. Right?
Yeah.
The corner. Okay, wrong. I bet you have had many an instance where you had to fish for a chipped shell, and it's really difficult to get out of the yolk, or out of the white.
It is usually. No, I know what I'm doing, though.
Okay, maybe you do, but here's the right way to crack an egg from an emailer, and I verified it this morning. You crack an egg on a flat surface, right in the middle of the egg. Boom. No shells whatsoever. You pierce it with your thumb and you're good to go. Magic.
Yeah, but doesn't all the stuff come out of it then?
Yeah, if you smash it. Control yourself.
Okay. That sounds like it cause way more of a mess.
No. Try it tomorrow. Egg, counter, a flat crack. That's it.
Okay.
Moving on.
Yeah, I was shocked too that a lot of egg content.
Yeah, really seemed to resonate. You know why? Eggs are apolitical.
This is true. We didn't get a ton of follow-up on that, but I got one politics thing today. That's it. The stock market is on a heater. I had our chart kid Matt look at this for me. Over the past year through 9/30, the S&P 500 was up 36.4%.
What about through 9/12?
What?
Sorry, I told a friend of mine that I was going to drop a Howard Stern reference, and
oh, okay.
Sorry.
Gotcha. That was a. Did you listen to him on Smartlist? He was pretty good.
I did not.
He was on Smartlist recently. So I looked at all the rolling 12-month returns going back through 1926, which is how far I have the data, and that's in the top 10% of one-year returns. The stock market is on a heater. And then I looked at all the 3, 5, 10 going way back, and I mean, we've been doing great since, I don't know, the past 15 years, but the whole point of this exercise was to look at how little variability there is over time.
Yeah, this is pretty remarkable.
Right?
I just got to say, I'm sorry, I can't help myself.
Yeah.
I noticed that Japan's not on this chart. I saw a stat this morning that
the long-term returns in Japan aren't bad. It's 9%.
Stop.
It's true.
As long as you invested any time after 1989, you were good. 214 stocks in the S&P. I think that was a number, hit a new all-time high in 2024. Not bad. So pretty decent participation. Josh and I were talking with maybe Dr. Kelly about this, or maybe somebody else, I can't remember. I had Chart Kid show the rolling 5 and 10-year returns, and I just assumed that they would be like in the top, certainly the top quartile, decile even maybe. No, not the case. Just above average.
Yeah, it's not that. And the funny thing is the 3-year number is the one that got me because 2022 was an awful year.
Well, that's the thing. It's funny. We think like, oh, returns have been incredible. Oh yeah? How about 2022? Didn't we have we had a 2-year period where stocks went nowhere?
Yes. So the 3-year period is actually pretty close to average because you had 1 bad year and 2 good years. And so the S&P is up 24%.
Well, as 22 rolls off, the 3-year rolling period will be pretty.
We keep asking
if
we keep asking, is this as good as it gets? And things keep continuing to get better. We're up 24% on the year now. This has just been so we had an 8% correction with a 20+% gain. That's a pretty darn good year.
Mentally, I'm mentally prepared for this as good as it gets. Not to call the top at all or anything, but like, how about this? When I say that mentally, I'm soaking it in. I'm enjoying it because it's not always like this.
Enjoy the ride. So Chart Kid Matt had a really good one too. He said since May 2021, which was just after the peak of the craziness for the meme stocks have gotten 19% cheaper. So we said in May 2021, the PE of the S&P was 33 times. Now it's 26.7 times. So it's 19% cheaper. Over the same time frame, stocks have rallied 38%. So he's saying earnings have grown more than the stock market in that time, which obviously some people would say, well, 26 times is still pretty expensive. But this is the kind of thing where I think when people look at valuations, they assume static earnings.
Right.
Right?
Yeah. Like it's 26 times forever. Oh, yeah? How about 2 years out? How about 3 years out?
Yes. Great chart by Matt. Really interesting. I never would have thought that if you would have asked me.
Yeah.
All right. So I thought one of the interesting things, you mentioned your talk with David Kelly from JP Morgan. He talked about this difference between diversification and hedging. And I think it's a very important point because I looked at the spreads on bond yields and then the inverted yield curve stuff, right? And I think if you use these kind of signals and you'd say, all right, now is the time. If you were one of these people that looked at these signals 2 years ago or wherever, especially the inverted yield curve, and you said, this is it, there's a recession coming. The inverted yield curve is telling me this. And I think a lot of people look at that as, okay, it's time to hedge. As opposed to I think his point would be like, okay, if you really think you're worried about some sort of signal that may or may not portend something happening, maybe diversification is a better bet for you than hedging. I think that's the difference between being like an investor and someone who doesn't know what they're doing.
Or being an investor and being a talker. So
Yes.
I think the good news is that how many investors did anything with their portfolio because of the yield curve inversion? I don't know, 0. Like it rounds to 0. You know what I mean? Like
Yes.
people that are actually investing in the real in the real world. Pundits,
yes, the pundit paper portfolios, those were short.
Yeah, exactly.
Yes. Okay. So he was talking about the wealth stuff. So I had to look at this. So since from the top in 2007, we had like $55 trillion of household net worth in this country. The Fed has this really cool data series that you can look at. And
source. So you said the Fed? Okay, I'm just
the Fed. Yeah. So this is from the Federal Reserve. Pretty
reputable.
It dropped like $10 trillion in the Great Financial Crisis, which was bad for people. Obviously, the stock market fell almost 60%. Housing prices were down almost 30%. You would expect a ton of value to be lost, but it was like $11 trillion. From then, from the first quarter of 2009, we've added $100 trillion in household net worth. And since the pandemic started in 2020, this is from Q1 2020, we've added $50 trillion in household net worth.
How many billions is 100 trillion? Don't answer. There's a rule. You never do math on a podcast.
Okay. The funny thing is, these are the kind of questions that my son will ask me.
Is it? Wait, I was about to give an answer. I'm not going to do it.
So my question. So I have like 3 takeaways from this kind of data. One is that, like you guys talked about on the podcast, this is one of the reasons we didn't go into recession. But 2, short of a really bad exogenous event that totally changes everything in the economy, whenever we do have a downturn, most households are going to be able to weather it. Right? There's a huge margin of safety built in there for people who own a house or own financial assets, which is something like 2/3 of the country. Not everyone, obviously. And then the other piece of this is the other 1/3 of the country that has not taken part, even though the bottom 50% has seen their wealth grow the largest relative amount over the past 4 years. It's grown like 100%, bigger than any other, but it's still a small piece of the pie. I think this kind of thing, this one-time jump in wealth that we're probably never going to see again, is going to already has brought out a lot of anger in people.
Mm-hmm.
Right? Because even if the percentages aren't as big for the top 1% or top 10%,
the numbers are huge.
It's just a massive, massive number. And I just think so many people, just think about the baby boomers who have retired into like the greatest period they could have ever hoped for. Their house is worth way more. Their stocks are worth way more. There's yield on their bonds now. If you had financial assets, you are pretty well set. You are doing way better than you ever would have thought coming out of a global disruption like we had.
Yeah, so dude, I keep saying things are good. There's 9 streamers. You've got individual egg crackers on Instagram. I mean, life is good. You know what? Josh made a good point on that podcast with Dr. Kelly, asking a question like, in a services-based economy, aren't the cycles just different than when it was mostly manufacturing-based and it was factories and you had the booms and the busts, and it's extremely scary to say that the cyclicality of the business cycle is different now than it was then. But how is it not different?
Well, that's a good point, because maybe this is why the commodities price spike didn't matter as much as some people would have assumed, right? Commodities did spike when inflation kicked up and the war in Ukraine started, but it didn't impact, like,
Yeah,
what does Facebook care?
Yeah, how do commodity prices impact Google?
Right. Yeah, they don't get that. That's why the thing is, everyone always says, like, the worst case scenario for like stagflation is an oil shock, right? What if we got that and it didn't have as big of an impact as it did in the past because of this? You're right. Is higher oil prices really going to impact NVIDIA? I don't think so. So from Bloomberg, here's one of the other things that's happening because of this. Since the start of 2018, higher earning households have raised spending more than twice as much as low income groups. This is a study from the Fed as well. So they consider high income 6 figures, low income below 60 grand, middle income is 60 to 100. And this is like the wealth effect in play. It has to be. This is especially since 2021. The high income group has increased their spending way more than the other groups on a overall basis, on a percentage basis, that people feel richer, so they're spending more money. Logically, it makes sense for people.
Yes, totally.
Right? So more trips, my house is worth more. Why don't I spend more? This makes sense to me. And this is one of the things that our house is worth more than it ever was. Why wouldn't I spend some of that money doing renovations on the house eventually? Right? I think that it totally makes sense. Because I don't know, as far as like the economy goes, the wealth effect thing to me is I never really bought it. But as far as spending goes, that's where it made sense to me.
Well, you saw the median. Somebody had a chart of the median. Was it the median 401k balance in the United States? Did you see that?
No. What is it?
250 grand. Does anybody? We went over this months ago. Like, does anybody's mood or spending habits change based on the value of their 401k? I don't think so.
No, but in totality,
it's tied in. I know it's tied into the.
Yeah,
it's baked into the pie.
The retirement one is probably the biggest. But the other thing is though that for people who are in retirement age, they see that 401k balance and they go, yeah, I can retire earlier. I think you're getting a lot of that probably. All right, this is interesting. So you keep talking about things are going well. Heather Long at the Wall Street Post asked, "This is a great economy. Why can't we celebrate it?" She says, "By just about every measure, the U.S. economy is in good shape. Growth is strong, unemployment is low, inflation is back down. More important, many Americans are getting sizable pay raises and middle-class wealth has surged to record levels. We're living through one of the best economic years of many people's lifetimes, yet it's barely mentioned in the popular culture or the campaign trail." Do you think this is just the new normal, that negativity will just always prevail and we can't celebrate this stuff anymore?
Yep, it's over. That's serious, unfortunately, and it's
I think it is,
and I think it has nothing to do with who's in the White House. I just think this is the state of our society right now. We will always focus on the negatives, and I think that consumers and investors, you have to figure out a way to survive mentally. Tune it out. You can't, you know what I mean. Like, protect yourself, because it's always going to sound like things are going bad.
Well,
there will never be a time where we're all like, pretty good.
Yeah, I tend to agree. We got a few emails about the politics from people saying, I was a Democrat, and when Trump was president, I had to force myself to look at the data. And someone else said, I'm a Republican, and now that when Biden was president, I had it shouldn't have to be like that. But I think you're right. That's just the way things are these days, unfortunately. Because look at all these numbers. So the U.S. has by far the fastest growth of any country in the world right now, developed. We're just crushing everyone. Canada, the EU, Japan, UK, Germany. Wages have risen faster since February 2020. Wages have risen faster than inflation, which a lot of people would not guess. I mentioned this, the bottom 50% have seen their wealth nearly double in recent years. They have by far the greatest, the top 0.1% has seen the second greatest, but the bottom 50% has seen the largest increase in wealth. They still only own 2% of the pie, but things are pretty good. Look at this one from the Wall Street Journal. Look at how much lower the poverty rate is now than it was in the 1990s. Everyone looks at the 90s as like this economic nirvana. So many of the stats today are better than they were in the 90s. The poverty rate is much lower today. It's like a third lower than it was in the 1990s.
But I do think that it really, for reasons that are super complicated, it doesn't feel as good. And I don't think it's necessarily nostalgia. I really do think in the 90s things felt pretty good. Like, let's skip to this tweet from our friend Jake at Economic. So Jake tweeted, where is this? Jake tweeted, hold on 1 second. All right, we're back. Sorry about that.
Michael's in a new location. We were just talking about the wealth effect of spending, and you're a
D-
prime
don't-
candidate for this.
Don't shame me.
No, I'm just saying. So you had to leave.
Sorry, I didn't. My house didn't come with a modern farmhouse. I had to do work.
You had to leave your house because they were doing work on your house, and now you're in a new location at another office. And what are you getting? A second mudroom put in?
Yes, I can't. The first one, it's nice. I like my mudroom, but I needed another. So
they were going to be doing construction work outside of your office, and you had to leave.
Correct.
Okay, moving on.
Okay.
That was fun. All right, so we were talking about why negativity is the new normal. And you were talking about how in the 90s, things were just different. Go from there.
Yeah, okay. So Jake tweeted, growing up, I was solidly middle class. I also lived an hour further outside the city than my parents would have preferred, went to a sit-down restaurant one time a month, was a latchkey kid starting in 3rd grade with 2 working parents, never would have even contemplated the cost of travel sports, went to a below average public school, was on a plane under 5 times under 20. Someone with this background would now view themselves as poor. I think it's largely expectations and not situations that have made people feel things have somehow gotten worse. And you're probably, if you're listening to this and you're roughly our age, you're probably nodding your head.
Yes.
The only one of these that didn't really resonate with me was the first one, lived an hour further outside the city. I don't know. We live in the suburbs. I don't think that was because my parents wanted to live in the city, but sit down at a restaurant once a month. I think that makes that
Pizza
jives.
Hut was a big deal for us. We would go to Pizza Hut like once a month. That was our
that
thing.
jives. I grew up with divorced parents, so I lived with my mom, but she was working, so she came home at 5 or whenever she came home. I don't know. And I'm thinking, like, what did we do when we came home? I don't know. I let myself in and I watched X-Men and ate Cheerios or Oreos or whatever. Travel sports was a no-go. I'm sorry. I went to a pretty good public school, a very good one actually. And then was on a plane 5 times under 5 times under 20. I don't know if that's true. I did go to Florida to visit my grandparents, but I don't think, in fact, I know I never did a vacation with my parents. Again, maybe because they were divorced, that had something to do with it. But I never was on an airplane for vacation. Again, outside of seeing my grandparents. But again, middle class, like, had a fine upbringing. I had what I needed. I got a new pair of sneakers every school year. But like now it's just, I was looking at my kids this morning, and this is not unique to me in my town, at least. This is not like crazy to me that we're like the rich people in my town. Kobe was wearing a Jordan like jumpsuit. He had like a Jordan hoodie, Jordan Luka sneakers, and he has multiple pairs of Nike sneakers. And what? How did this happen?
I remember getting a pair of the Nike Airs where you could see the air in them. That was a big thing. And when I got those, I had to beat my parents down for like 18 months to get those. Like that was a big deal for me.
I remember my spending limit. I remember it vividly because this is what it was for years. Never inflation adjusted, by the way. It was $60. And I could never spend more than $60 on a pair of sneakers. And now just kids have Jordans.
So to get out of the old man mentality, here's the thing. This is progress. Right?
True.
We've made progress. Travel is better. People travel more. Restaurants are way better. People go out to eat more. Travel sports is more expensive, and you could argue whether that's better or not, but it is just the thing. Cars, people drive nicer cars these days, and homes are nicer than they were when we grew up.
Yeah.
And you can say like the whole thing of people thinking that lifestyle was poor, it was just different. And now I think this is progress.
Yeah, it is. But it's also like, it's not all good or all bad. I would say like on balance, yes, I love that our kids have more than us. And I just mean like my kids specifically, like kids in my neighborhood, I think just have it better than have more shit, more stuff. I don't know if that's a good thing that they have more stuff than I don't know if that's good or bad, but there is a downside to this. Like it's expensive.
Yes. This is the thing with people saying I can't afford to live because luxuries have become necessities.
Yeah.
That's the problem and those things didn't exist in the past. The other thing about the negativity with the 90s, I think we were so naive back then in a good way. Right? Like we didn't know all the time what was going on. Sure, there was cable news, but you didn't watch it as religiously. There wasn't the alerts on your phone and the social media and the internet and stuff. And the internet websites that did exist in the 90s, you didn't check them all the time. You barely ever checked in because it would take forever on your dial-up modem for them to work. I remember I had a dial-up modem, and I had one of the early versions of whatever the thing before Napster was, and people would call our house as I was downloading music in like 1997, and it would break up my download, and I'd get pissed. And those are the kind of internet we had. Remember, you had to plug into your phone jack for the internet? Anyway, this is just get off of our lawn type of talk here. But I think this is one of the great things about the 90s is that obviously we have nostalgia for that period because we were young and we grew up in that period. But the ability to be naive it was okay to be naive about certain stuff.
I also think our parents were of the mindset like, I don't care what everybody else has.
Yes.
Like I don't care what your friends have. Like this is what you have. This is what you're getting. And
millennials cannot have that anymore. Millennial parents do not have that mindset at all. You have to have everything everyone else has. I put that blame more on the parents than I do on the kids, obviously.
Well, maybe I'm guilty of this because my wife does all the shopping.
But yeah, you're right. It's just, again, luxuries have become necessities.
Yeah.
All right, back to the economy. This one Torsten Slack chart of the week. He had this whole piece. He's been pounding the table for the strength of the U.S. economy. He's not being bitten by the negativity bug. He's showing household debt to disposable income for U.S., Canada, and Australia. Look at this. Their household debt to disposable income has just, the ratios continue to rise since 2008. Ours has fallen almost every year since then. We're in so much better shape than any other country when it comes to household balance sheets. All right, one more thing on politics. All right, nothing from you there.
Wait, okay. What about this credit card debt thing?
Oh, okay, that's another one. It's credit card debt as a share of disposable income. It's rising a little bit, but still way, way lower than it was at any time in the 2000s. We're doing just fine, balance sheet wise. All right, one more thing on politics. So the Wall Street Journal had this piece on looking at the economy under different presidents. First, they compare Trump versus Biden, and they look at inflation and growth and jobs and unemployment, and then they look at gross domestic product growth by Reagan and Bush and Clinton and the other Bush and Obama and Trump and Biden. And here's my problem with this kind of analysis. Again, giving too much credit or too much blame. Was Reagan a great president for the economy, or did he take over an economy that did crappy for 10 or 15 years and was due for a uprising, right? Was Clinton a great president for the economy, or did he get lucky from the dot-com boom? Was Bush a terrible president for the economy, or did he happen to inherit an economy after one of the biggest bubbles we've ever seen, and 9/11 in 2008? Like, was Obama great for the economy, or did he happen to take over at the bottom, right?
When you put it this way, yeah, it's infantile to think that the president could control the economy. Come on.
It's situational. Yeah. That's my whole point is that, sure, there's some policies they can make that help around the edges, but it's more timing or luck than anything. All right, one more thing. So the election is a toss-up. Any model you look at, it's basically 50-50. It's funny, people will get excited or hurt when it's like 51-49. Like, oh no, it's a toss-up. And the S&P 500 through the close on Monday has 46 new all-time highs. Right? We always hear about heightened volatility and heightened uncertainty around elections. The stock market does not care.
Not right now, but there are charts that do show like if you look at the VIX into election years, it does tend to go up towards the election.
But I'm saying
this year. Yeah.
The stock market does not care. Yeah, maybe we have some volatility, but would the stock, if uncertainty was at all-time highs, would the stock market have 46 new all-time highs as well? I just say no. People care more about politics than the market. How's that?
Oh shit! Raiders trading Devontae Adams to Jets.
I thought you were going to say they were going to trade Max Crosby to the Lions. I would have cared about that.
That would be. You know what? By the way, that was horrendous. The Hutchinson injury was just really gross and awful and sad. By the way, I am never going to MetLife Stadium until we get a new quarterback. I can't take it anymore. I can't take it.
Maybe this is another old man thing, but it's really cool to be at a game and be around people and stuff, but the experience of watching a game at home on a big screen TV is so much better. 10 times better than it is to go to a stadium. I just don't see the appeal.
I wanted to give Danny a shot. I did give Danny a shot. I was a defender, but it's enough already. Done. All right, back to the show. Sorry about that.
Want some more good news?
Please.
This is from MarketWatch. Groceries are getting more affordable. When you factor in rising wages, groceries cost about as much today as they did in the pre-pandemic years. So this is hours of work to afford a week's worth of groceries. And it had a spike, of course, in 2021, 2022. Now it's coming back down basically to where we were pre-pandemic. But again, look at this. Look at how much higher grocery prices were relative to earnings in the 1980s, in the 1990s, and the 2000s. Yes, we had a spike when groceries got more expensive, but groceries are cheaper now than they were back in the 80s and 90s relative to wages. How many people would believe you if you told them this on the street? 1 out of every 10 people, maybe.
Where do you get this data?
Have you been to the grocery store lately?
Every week.
Look at this. This is surprising data.
Agreed. Yeah. We'll take it.
All right. Did you listen to the Trillions podcast like I asked you yesterday?
You know, your tone. You're acting as if you know that I didn't listen, when in fact, I did listen.
No, I just asked.
No, so you didn't just ask. You didn't just ask. Play it back, John. Play it back. You heard what you said.
You're like my wife. If I text my wife something, I could say the flattest thing ever, and she'll assume there's a tone one way or another because I didn't include an exclamation point.
Your voice went up. I listened to the show.
Okay. So there was a story in Bloomberg about 100% yields are fueling a retail boom in new quick buck ETFs. And it's essentially, they're talking about there's this massive boom in derivative and options-based ETFs.
Specifically the income. People love income.
Yes, people love option income. And there's these like yield farm or yield max ETFs now. They're bringing billions of dollars. And essentially what they're doing is they're selling options on individual stocks. And the way that options are priced is based on volatility. And individual stocks have way more volatility than the indexes. So if you sell options on a stock like NVIDIA or Tesla or something that is very high vol, you can get a lot of income on that. And they're saying you get 100% yield in some of these.
They're selling like basically at the money options. So yes, they're effectively capping all their upside to distribute the income back to the investors. Why are they doing that? Because that's what people want. Right? Like there's so much demand. There's hundreds of millions of dollars going into these products. And whether or not they're like good, bad, or whatever, it doesn't matter. What matters is that people want them.
I know that these are relatively new for ETFs, the ability to have options in them in the first place. But doesn't it feel like in the last 2 to 3 years, a whole cohort of investors has just realized, like the light bulb went off, like, oh, you can earn income from options? It seems like this brand new thing people are discovering, and they do think it's a free lunch. And to your point, I don't know. I just think the volatility of these things, rising and falling, this is the kind of thing that works if things are going well in the stock. But they're saying that there's one based on Coinbase that they've returned 100% of its current share value back to holders as over the past year. Yet on a total return basis, the ETF is actually down because it's like trailing.
It functions like a dividend payment, right? Doesn't it just reduce the NAV?
Yes. So. Yes, and so I thought the guy that they interviewed on the Trillions podcast with Eric Balchunas he was actually relatively reasonable, and he said he puts it in his portfolio in proportion to its weight in the index. So if Apple's 5% of the index, he buys a 5% position in the Apple one or something. I thought he was relatively reasonable, but I think these things could come back to haunt a lot of people as the volatility changes.
Oh yeah, sure, sure. I think, but to the point that we've been making a lot about like how people are using different instruments. It's not 100% of his portfolio, not even close to it.
Right. It's a very small percentage.
But what he said that never, ever occurred to me as a reason why this particular crowd likes these type of strategies is because it sounds like this guy's in the FIRE camp. So he wanted a mortgage.
He's trying to like live off of it or something, basically.
But he needed this qualifying income to show the bank that he has income to support the mortgage, which never in a million years would have occurred to me as a reason to own these things.
Oh, I must have missed that part. That's interesting because he's like an entrepreneur.
Did you listen to the podcast, sir? There's no way you could have missed that. You probably stopped listening to it.
You know, I do a lot of podcast listening while I'm working out or jogging or something, and occasionally my mind will wander.
I get that. Yeah, no, it's like when you're listening to an audiobook, you have like 5 minutes where your brain just turned off.
It's like when I'm talking on Animal Spirits and your brain just shuts off for a few minutes.
My brain never shuts off. I am easily distracted by incoming Slacks and texts. My brain never shuts off.
Yep.
That's the problem with my brain. It never shuts off.
Okay. I have a question for you about our doc here. So we have the artificial intelligence headline. I think it's time to make a change. Can we change it to just innovation? Because last week we talked about Ozempic. There's AI. We had SpaceX landed a rocket this week, like took off and it landed. You know, people always say the moon landing was fake. Couldn't you say that the SpaceX landing was fake, where they just played the video in reverse, right? It didn't really land. They just played it in reverse.
Yeah.
But so self-driving cars is another one. So we have all this amazing stuff going on. AI, Ozempic is going to fix obesity in this country. We have rockets that can land on their own, and we have self-driving cars. This story made its rounds a little bit. It's a couple months old, but it's a story about Waymo. It says Waymo is now providing more than 100,000 paid robotaxi rides per week in the U.S., according to a LinkedIn announcement by the co-CEO. That's double the 50,000 weekly paid trips the company reported in May. So it sounds like it's mostly San Francisco, Phoenix, Austin, and Los Angeles. And the point is, for years, I was wondering, like, when is this going to happen? I think a lot of people were. And it seems like it's slowly but surely it's already kind of here in a lot of ways. And I don't feel like it's getting enough publicity for how crazy this is, that people are just getting in cars
because
it's driving on its own and no one's driving it for them.
Because it's so there's only, man, my brain is breaking. I'm trying to say it's only in a few cities. There was a phrase I was looking for. It's only in a few cities. But I think that when people experience it, they're probably like, yeah, this is magic.
My biggest question is still, I don't know how it works in a place like Michigan or the Northeast where there is inclement weather. I feel like these things just shut down if the weather's bad enough.
Yeah.
Like, do you think that they just, because I can't see how, some of the icy, slushy roads that I've driven on in Michigan or during a blizzard, I don't see how these things can navigate that.
Counterpoint, what if they know that the roads are lousy and they just go 15 miles an hour?
Well, I'm thinking, what if they just shut their fleets down for those days?
Yeah.
If it's bad weather, these things do not go. But that'd be my only worry. But I think it's kind of amazing that these things are on the road existing.
Well,
and there hasn't been no one's fought it or anything yet. It's happening.
Cars today must drive better than in lousy weather than cars back then. No? Than older cars? As an example, and this is not weather related, but I was driving my loaner car and I was on the highway going 85. I had no idea I was going 85 until holy shit. I could have been going 45. It was
so smooth. Do you have your car back yet or not?
No.
Okay. So thinking back to the 90s and bad weather. So my very first car I drove was a 1989 Accord. It was a stick shift. Had like 110,000 miles on it. And the tires were completely bald. Thanks a lot, Mom and Dad, for giving me bald tires in northern Michigan. So the first time I ever drove in the snow, it was a blizzard. I'm literally driving. We lived on a very steep hill growing up. And I'm literally driving down the road in the little tiny Honda Accord. Remember how small they used to be?
Yeah. Was it did you have a 2-door or a 4-door?
It was a 4-door, but it was a manual. So I mean, with the stick shift, it was hard. But I was literally driving straight down our hill and went to hit the brakes, and my car did a full 360 on the road and just stayed on the road and kept going. The very first time I ever drove in the snow. That's how bald the tires were. It was like a Fast and the Furious move.
My first car was a 1998 gold Buick Regal.
Okay, we both had gold cars.
I mean, it was.
You don't see a lot of gold cars anymore. Yeah.
No, they're ridiculous. Why would you buy a gold car?
It's true.
And the average age, I was like, when Bill Gates walks into a room and now the average net worth is a lot higher.
Yeah.
I'm trying to figure out an analogy for. I was the only person under 50 driving that Buick Gold Regal.
Yes, that is you see that in Florida somewhere in the retirement community, right?
Speaking of cars, we got an email. Hey guys, caught up on the podcast. Michael was right on the money that cars used to have bench seats everyone could squeeze across, including the front seats. That's wild. Bench seats in front. Remember that?
Oh, wow, that's true.
Because
people sit in the middle in front.
Because the gear shifter was right next to the steering wheel, like on a bus.
That was the worst seat. If you had to sit in the middle in the front,
how dangerous is that?
Yeah, not great.
Please don't crash. I don't want to die. However, it also used to be more common and legal to have infants and small children on laps. Wow. It reminded me of this article. So there's an article that this person linked to. Do car seat mandates reduce the number of children families have? And I saw the article and I was like, what? But then he said, TLDR, a study hypothesizes that car seat mandates are a disincentive to larger family sizes. As a father of 3 myself, I agree with this. And even if you can buy narrow car seats and fit 3 across, it's a sweaty, awkward nightmare dealing with the straps and tightening. I also think our propensity to travel more these days is a factor, as it is very difficult to book hotel rooms for families larger than 4, restaurants too. The modern world is built for units of 4. Ben, I thought you would like this. By the way, there's nothing more frustrating, and I'm exaggerating, than putting in a car seat when you can't get the clip and you do start sweating. Like
I had 3 car seats at once. I was very good at it. I like a NASCAR pit crew for this. I like the trick is you sit on the car seat to weigh it down.
Yeah, I get irrationally mad trying to put in car seats when it's not.
It was
working.
hard, but I was because we had 3. So yeah, this person is true. Family's larger, so we have 3 kids. And going to hotels is a pain. They always say like we can't promise you that we'll have a pull-out bed for you. And sometimes they try to make you get 2 rooms. And so obviously we just say we have 2 kids instead of 3 to sneak someone in. But it's a huge pain in the butt with 5.
Yeah, I mean that's why you're an Airbnb guy.
Yes. Speaking of Airbnb, I tweeted this last week. Airbnb, since going public, is down. They went public in late 2020. Is down 7% in total. S&P is up almost 70% in that time. And I made the point that like good companies and products don't always make for good stocks. And I couldn't believe the amount of people who wrote back to me that I hate Airbnb. People hate this product. Hate it.
Really?
I mean, maybe it's just Twitter, but
I thought you were going to get more of like, oh, well, yeah, that's what happens when you buy a company at 90 times sales. Or something
yes,
like
and
that.
a lot of people said that too. Well, guess what?
Okay.
It was expensive. And I bought Airbnb along the way, like as it fell. So I bought it a few times. I bought it at the IPO, and I finally last week sold it. So if you want to use me as a contraindicator that Airbnb is going to take off now, do it. But I've held it for a few years, and I think it's not even like a good products versus good stock thing. Like the Airbnb was just an amazing idea. And I thought like it had the chance to be like kind of like the next Uber in a way like that. And it seems like it's just not going to happen. And the funny thing is whenever we do, because I do love Airbnbs more because it's more room. It's easier to relax than it is in a hotel room. And you have laundry for kids, especially in like a week-long vacation. I would much rather do an Airbnb, but we always book through VRBO.
Why?
I don't know. I find a better selection. Maybe it's where we're looking when we go to Florida or something, but I always find better houses on, do people call it Verbo? Sorry, VRBO to me. We always book there more than we do Airbnb. But anyway, if you want to use me as a contraindicator,
All right,
I sold all my Airbnb bot.
I will not be buying Airbnb.
All right. Survey of the week. A bunch of people sent me this. In a new survey, 300 executives said climate change is hurting their businesses, and nearly half believed being based in the Midwest would be less risky financially. 3/4 of survey respondents said their companies have been considering relocating due to climate risks, with nearly a quarter saying they've already relocated in part because of climate change. 6% said they plan to move their business in the next 5 years. They're saying the Great Lakes, fresh water, good climate hedge. I'm still
good
sticking with
beers.
this. Very good beer. Beer City, Michigan, or Beer City, USA in Grand Rapids, Michigan. All right. Did you see this Reddit post going around yesterday, making the waves?
I did not.
A lot of people tagged us on this. You don't look at your Twitter mentions anymore or notifications? So
here and there.
a few people tagged us and said, hey, I want to hear your thoughts on this. And the headline of this is, WTF is wrong with our parents. And this person said they're in their late 30s, 2 small children, high cost of living. They have a small house. They're in credit card debt. Kids go to daycare that bled their savings. He said typical millennial stuff. Last week, he said he found out that he found his father-in-law's account summary, which I don't know how you find that without snooping. But he said he found out his in-laws are worth $10 million, and he mentioned it to his own dad and has said he's doing just a bit better than me. So let's say his parents are worth multiple millions as well. And the whole point is he's asking, why are they not helping us?
That part's an assumption by you. You don't know how much money his parents have.
Okay, did you read this or not? He said, well, he's doing just a bit better than me then.
Well, to me, I thought I saw that as like sarcasm. Like he has so much more money than I do.
Okay. Regardless, the point of the post
by the way,
is...
No. I just want to say that's interesting. I feel like sarcasm is a native language to New Yorkers. And people like you, no offense, it's not a judgment. You just take things at face value, which is very nice.
No, I'm a very sarcastic person.
Well,
But yes, you're right. So you're saying you could have read this as sarcasm. That's fair.
No. I'm like 90% sure that this person does not have $7 million. The dad who's saying, well, he's doing just a bit better than me then.
Okay. So
either way, keep going.
So he's saying, here are our own effing parents sitting on their piles of gold watching us navigate a new level of f***ed up economics and shopping for discounts and raising our children in subpar school districts, and for what? And he's saying, like, give me the money. So he's saying his parents are loaded. So maybe you misread the sarcasm.
Hang on. I want to give my last dollar to my son to make sure. Here are our own parents.
Yes.
I think he's talking about her parents, but be that as it may. What's your read on the situation?
So people were really angry about this one, saying, how could these parents not help their kids? What's going on? And so I think this is generational. I do think that there's a generational thing with baby boomers and people in older generations that it wasn't like this for them. They didn't have their parents helping them, and they don't understand. Their whole mindset is, I will give my kids an inheritance someday. They will be getting this money. They'll get it when I die, and it'll be great. And I think young people now are of the mindset of, no, help me now when I need it. And that makes more sense to me too. Yeah. But here's the thing.
I need more details. I need more details before I cast judgment.
No, but I'm not casting judgment either way. Here's the thing. If I'm thinking about this from a young person perspective, you have to ask your parents. Talk to them. They're not going to just get it on their own. That generation, for the most part, I'm not saying all of them, some of them need a little nudge. And you just need to say, listen, I'll take my inheritance now knowing it's going to be smaller than it could be someday, but it'll help me more now. I think you have to just have that conversation.
I agree.
That's the problem.
I do agree with that. But so I'm curious, are people's reaction to this more like, wow, their parents are assholes?
Yes. That's yes.
But I could be, but I want more information. What if this person is just like lazy and not really do what they're supposed to be doing? Which I'm not saying that they aren't. I need more information. Because what if that's the case? And I wouldn't blame the parents.
What if it's two brothers and they've been robbing houses and their parents decide to cut them out of the will? What if that's
exactly. What if this person's a robber? Just a deadbeat dad that's not doing the right thing.
Sorry, you didn't get my Menendez reference there.
Sorry about
that. Speaking of sarcasm.
My bad.
You're not watching. The Menendez brothers got cut out of the will anyway. All right. I paid a water bill yesterday for $46. They charged me a convenience fee of $2 on a credit card. What are we doing here? So that's a 4% charge just for using my credit card? And this is through, why do governments have to pay that convenience fee? And what's so convenient about it? That sounds like an inconvenience fee to me.
Okay, Jerry.
What? What is the deal with that? I'm just saying. What?
No, it's a good point. At MetLife Stadium, the parking was $35, or so I thought. It was actually $46. Why? Because there was a surge charge fee and a service fee and probably a convenience fee. It is quite annoying. It is quite annoying.
That's all I'm saying. It's annoying to get that stuff. I paid a couple bills yesterday. Every time I was like, oh, we're going to do a 3% surcharge on your credit card. Isn't crypto supposed to fix this? Huh? What am I paying with stable coins?
Don't look at me. I don't know.
When's it coming?
I'm a Rails guy. All right, we got an email from somebody who is a civil engineer, just a sort of a PSA talking about flood zones. He said, to see the flood map for your neighborhood, search FEMA NFHL Viewer. That's National Flood Hazard Layer. As you and others have alluded to, just because you're not in the mapped floodplain doesn't mean your home can't flood. Water doesn't obey FEMA maps. Some areas have very outdated floor studies, and there's always a bigger storm. That's true. So anyway, there's a link here, but I would check that out if you're considering moving to a potential.
So the point is, just because you haven't had one before doesn't mean it's not going to happen. Like, right?
Yeah. I don't think Asheville was ever prepared for something like this.
I'm looking up my address right now. They don't really give you a lot of information here. All right. Not bad.
Okay. Last week, Ben, we were speaking about the most awkward place to have small talk. So somebody followed up and said, had the most awkward, embarrassing moment at a urinal last week. Did you see this?
Yes. Very good.
I walked into the bathroom. The only urinal open was the middle one in between two guys talking. To avoid the small talk, I walked up and was scrolling my phone while doing my business. I found something funny I wanted to send my wife, so I took a screenshot. As I pushed the buttons, the shutter sound echoed as loud as a horn. I can only imagine my face as I had to look at both dudes telling them I did not take any picture and only took a screenshot.
That's pretty good.
I was in the bathroom at MetLife Stadium. Sorry for all the MetLife Stadium, but this just occurred to me. By the way, what a piece of shit that stadium is. Oh my God. You've never been, right?
No, I've heard nothing but bad things.
Just garbage, especially after going to beautiful Minneapolis Stadium. I forget what it's called, Bank of something. SoFi, and where the Raiders play, and then we've got this hunk of junk metal, just garbage. But anyway, so there's two guys arguing in the bathroom about to get into a fight. And with all the fights at football stadiums, do you think that people go to the stadium thinking that they're going to get into a fight?
I often wonder that. Or if people just decide, just lose their minds at the game because they've been drinking too much.
It's so crazy how prevalent fights are at football stadiums. Bunch of maniacs.
It is. It seems every week there's just, the social media is just littered with videos of fights. What do you do on your drive home? Like, man, can you believe that fight I got in today? Like, I don't know what the thought process is, right? Like, man, I thought I had the low ground. I thought I was going to win for once, and it just didn't happen.
Yeah, imagine coming home with a black eye and your wife is like, "What?
Yeah, your jersey's torn up.
Sorry, got into a fight. Happens."
You know what the thing is? Don't wear a jersey. It's always guys in jerseys that get in fights, right?
No, I do have a bone to pick actually about stadium goers. When people just wear a random jersey that might even be a different sport to a sporting event.
That's a thing?
Oh, yeah. Like I saw a guy in a Tampa Bay Lightning jersey. All right, I made that up, but that was just for effect. But you see it all the time. Makes no sense.
Okay. This is why I stay home and watch it on my 70-inch flat screen.
Ben, did you
I don't have to get in a fight. I just get in fights with my kids.
Did you watch It's What's Inside? You did watch It's What's Inside.
I liked it. Very good recommendation by you. They could make a sequel of that movie, but it was very good. Good twist ending. Didn't see coming. I liked it. I enjoyed it.
Credit to me.
Yes. Good call for you.
Oh, Terrifier 3.
Well, wait. I told my wife, I said, I watched this really good movie on Netflix last night. You should watch it. And she said, why did you watch it without me? I said, well, Michael is the one who recommended it, and I thought it was going to be terrible. So.
That hurts. But that happens with my wife all the time. Why did you watch it with me? Because you say no to everything that I suggest.
Yes. True. Yes.
That's why. Blair Witch, we spoke about it last week. And I was wondering, like, I'm sure there is a reason. Why don't they re-release old movies? So Pulp Fiction, it's the 30th anniversary. Would Pulp Fiction not make $10 million if they re-released it?
They actually do show at our movie theater. They show random old movies on one of the theaters, on one of the screens.
Oh, really?
I would a big deal.
I would love to see Blair Witch again. Imagine Blair Witch in IMAX. Are you kidding me?
That is, I don't know. Do you really want to see if that girl's nose in IMAX?
Yeah.
At the end? Okay.
Are you watching The Penguin?
Sorry, I haven't got into it yet.
Okay. That's okay. I'll stop asking.
I will. I've been going through the Menendez brothers show, and I gotta say, so you obviously haven't been watching it because you didn't get my reference earlier about being left out of the inheritance.
Not true. I saw episode 5 where the entire thing was it Lyle or Eric? One of them just in jail, just talking for 35 minutes. That was impressive acting. How did he do that?
They are pretty good.
Did you see that episode?
The brothers are good. Yes,
it was a 35-minute monologue. That was the entire show.
Yeah. It's very well done. It's just it's the kind of show you don't feel very good after watching. Like none of the people are redeeming in any way. The name of the show, Monster. I know it's after the Jeffrey Dahmer one too. Is called Monster. It's just you don't feel very good about yourself after watching the show. They're just so screwed up. But this it got me thinking about the money and happiness thing because they're loaded. They're wealthy. We talk about the money and happiness thing. These are the kind of people that no amount of money in the world. They could have been as rich as they were or poorer than poor, and they would have been unhappy either way. These people.
Yeah, just garbage people. I mean, obviously.
Yes, but just not great feelings from this. Book recommendation. This is Strategy. Make Better Plans by Seth Godin. I had the opportunity to interview Seth Godin last week. It's going to be on our Animal Spirits feed next week. Here's the thing I love about Seth Godin. I've been reading him for years and years and years. He's got a daily blog. He's written like 20-some books. I've probably read 5 of his books. A lot of stuff on marketing and sales. He'll have like a 3-sentence blog post. And those 3 sentences, the way he can simplify complex topics is something that I really, really respect in someone. Like the ability to take hard stuff and make it sound easy even when it's not, like that. He's a master at that kind of stuff. He was very good. I was kind of blown away. And I asked him for a bunch of advice too on the podcast. You weren't there for it. But so next week with him, but I'm a huge Seth Godin fan. So that was really cool to do.
Okay.
I was actually kind of nervous. I never get nervous for this kind of stuff. I was kind of nervous to interview him.
Yeah?
Yeah, I was very prepared. He also said he liked the name Animal Spirits because he obviously had no idea who we were. He said another backup name for the show should have been Spontaneous Optimism, which I guess is another Keynes saying, which I've never heard before. But I kind of like that. Yeah.
All right. Terrifier 3.
Jeez.
Terrifier 3 killed it at the box office.
I've never heard of 1 and 2.
Oh, really?
No.
I guess that shouldn't surprise me. It's been, all over the internet. Yeah, it did. It had the biggest weekend box office, $14 million.
Okay, just another horror movie.
No, it's not just another horror movie. It's over the top grotesqueness.
Yeah, but I feel like you say this with every horror movie now, though. Like,
no, I do not. I'm not a horror porn sort of guy.
Because there's been because you literally talk about a horror movie every week. How could you not how do they not just keep trying to one up each other? That's the only way they can stand out, right?
Well, this really is the one, and I'm surprised that there's such a big audience for this. So I thought about going to the movies for this, but I said to my friend, I was like, you know what, I don't want to go. It's just this sort of stuff doesn't do it for me. I did watch Terrifier 2 though over the weekend, and I'm not recommending it. It is over the top grotesqueness just for the sake of it. And I don't know, it's just not for me. Like I get why people like it, not my cup of tea.
If our production team had more time, I'd have them go through all of your horror recommendations. You'd be saying the same thing for every one of them.
No. I don't like Hostel. I don't like that stuff.
Okay. I just don't see how they continue to make a new horror movie every week. And I mean, obviously people like them. They wouldn't keep making them. They make money.
I mean, they keep pumping them out. Why? Because that's what the audience wants. It's not just me, Ben.
So horror movies are the new like Avengers. They're the new superhero movies.
Yeah.
We're just going to beat it into the ground.
Yeah, I'm here for it. Smile 2 next week. I will be in the theater for that, for sure. Did you see Smile 1?
I heard it was grotesque. No, I did not.
It was not grotesque. You did not hear that from me. Nice try. Very scary, very scary. Okay. Thank you to everyone for listening. Thank you, John, for hopping on. Duncan, Daniel, Nicole, the whole team.
Thanks to Ben for his patience as Michael changed venues. We did it. That's a first for us, actually. Changing venues mid-show. My favorite part about it is that your general contractor's name is Tito. I don't know why. I feel like if you have a name like Tito, you have to be in construction. Is that fair?
He's the only Tito I know.
All right. I guess
he's a good man.
5. All right. Animal spirits at thecompoundnews.com, and we'll see you next time.